So, Julia Coronado, what do you do here as you play this market? Do you accumulate bonds that you plan to hold on to for a while if we're not going to have rates coming down for a while now?
Well, I think the higher for longer scenario is where we seem to be landing here in terms of the data tracking. You know, you've got the consumers benefiting actually from this. The immaculate disinflation. They've got a boost to their purchasing power because inflation is coming down without labor market weakness. Now, it's not the job of the Fed to kill that. That should be good news as long as inflation continues to come down. They've been wrong about inflation before. It might take less economic weakness to bring inflation down. That would be a productivity story. And that's the key for the earnings season now. Are companies telling us that yes, top line growth is moderate, certainly a lot moderate than it was in the last couple of years. But on the other hand, they're seeing some better operational efficiencies from reduced supply chain frictions, from reduced labor market turnover. These are the things that could open up a new phase of the expansion, although it would mean that the Fed can keep rates higher for longer. They don't need to necessarily go further, but they would probably hold here. And we're seeing the long end of the curve really push upward. And that can take its toll on the economy over time.
So, Julia,
mortgage rates are at new highs. Housing's expensive.
Julia, so often when we talk about stock picking, we're talking about what to buy. Maybe too often. Maybe we should be talking about what to sell, because a week ago would have been a good time to sell the regional banks, right? Today, the KRE is down 3%, around $45.45. It was up near $49 not long ago after, rallying up from the, I think, a 39-ish range when it was low. So given everything that's happening in the market right now, maybe it's less clear what to buy, but do you have any thoughts on what to sell?
Look, I think the greatest vulnerabilities in the economy right now are not so much in the U.S. or the U.S. consumer. It's really about the global backdrop. I think the data we're seeing out of China, the data even in Europe really suggest, while the U.S. is a bright spot, there's a lot of weakening in global momentum. So companies and industries that are really reliant on that global growth story are probably going to feel the pain of that in the coming months. I think also, housing is a sector that has gotten a bit stuck with people not wanting to sell their homes because they've got low rate mortgages. We really haven't had the price discovery that we need to have. If rates are going to stay here, housing is not in an equilibrium. And so we will have sort of probably fits and starts to this housing adjustment as we adjust to the reality, or at least what seems right now like the reality of higher rates this cycle.
Yeah, with inventory so low, it's hard to see exactly how this unravels.